stop moving your stop loss to break even at 1:2. Doing this is why you lose a winning trade all the time. This is one of the biggest mistakes traders make, and it is killing your profit. Trust me, it's killing your profit. Now, this very moment, I'm going to go into the charts right now to break down why keeping your stop loss in its original position based on structure can improve your win rate and overall profitability. Now let's go into the chart. Now can you see, look at this chart. Now this is gold on 15 minutes. Now look at it. This is where the price is at the moment, right? This is where the price is at the moment. I want to trade because this price action has actually created a bullish fair value gap. As you all know, we usually trade with fair value gap, right? Now let's map out our fair value gap so that we can trade with it, because I want to show you something very important and the reason why you must stop what moving your stop loss to break even. Now look at it. This is fair value gap, right? This fair value gap, so we expect that price comes into it. Just like fair value gap is a magnet, when it magnetizes price towards itself, and when price gets into it, it pushes price away because it rejects what? It rejects price. So now this is our expectation, right? So now let's look at it. So now look at it. Price has actually come into this fair value gap. So now it is expected of this fair value gap to now what? Push price away. Now we are going to use one of these strategies that I've taught you here, which is two candle rejection. Look at it. This price has come into this fair value gap. Then we will now wait for a rejection candle to be formed. The moment a rejection candle is formed, then it shows that price is about to move. Then we can what? We can place our entry. Okay. Now let's take a look at, has it been rejected? Yes. Can you see? So this white candle came down on a full body to sweep the low of this what? Previous black candle. After sweeping the low, price now started what? Moving upwards, creating a what? Creating inverted pin bar. Okay. Now, and plus a bullish body. So this shows what? A rejection. Price has been rejected. So it is now an opportunity for you to take this take this trade. So you wait to see that this trade has closed, okay, before you enter. Immediately this candle closed, then you just enter, then you place your stop loss. Just look at it. Now look at this. Can you see? So this is where you are going to place your entry, then you place your stop loss just at the low of this what? Of the wick of this white candle. Okay, then you target your 1:2. Like I usually say, 1:2 is super enough. It's more than enough for you to what? To be super rich. You get it. So now let's take a look at what eventually happened. Can you see? So price went in our direction, but it has not hit our what? Our profit. Okay, it has not hit our profit. But what most traders do is that they will move their stop loss and put it and place it at what? At break even, where they what? Enter the trade. It is very wrong. It is actually very wrong, because most often what price does is that price could still come down to take you out at that break even, but it is not expected of price to come to the low, okay, where it is being rejected. But at this break even time points, price can still come down to take you out of the market. Okay, so don't move your stop loss to break even at 1:2. You understand? After rejection, price is expected to expand. So when price expand, it will definitely what? Hit your what? Take profit, and you make a lot of money from what? From the market. That is just it. Now just let's take a look at this now. Price has actually formed another what? Fair value gap. Can you see it? Price has formed another fair value gap. It's even an opportunity for you to take another what? Entry. Okay. Now let's go into it. Now what you do now is that while this is running, now you place your what? You wait for entry here. Okay. You wait for another entry. And there's something I want to actually explain to you. You understand? Moving your stop to break even at this point is fear. You understand? I see it as fear, not what? Risk management. Most traders, especially newbies or probably beginners trader, that is what they do, because they are scared. So they want to quickly lock up some profits. And doing that is killing you, is killing your what? Your trade. And this is one of the reasons why you are not profitable. Okay. Now, why this is what? Why this trade is moving to our TP, then we can still place another trade. Now let's take a look at it. Can you see? Now can you see it has hit our what? TP. So and this has not what? Price has not come down to mitigate this fair value gap. So we've made money while trading this. Now we still wait for another opportunity to what? To re-enter a trade, another trade again. Now let's take a look at, oh, can you see? Price has actually come down to what? To this fair value gap. Now that price has come into this fair value gap, you wait for what? A rejection candle, because that is the strategy we are using on this particular trade. Okay, you wait for a rejection candle. This is not a rejection candle. This black candle is not a rejection candle, because the look at it, the black body is shows what? Shows a seller pressure. Can you see? Now, and its length is almost the same thing as the wick that is coming out. So it's like a balanced battle between what? Between seller and what? Buyers. So definitely it's not a rejection. You wait for a rejection candle. Now let's take a look at, oh good, can you see? Now after this black body, black candle, after the black candle, we now saw this candle and an expansion candle. This expansion candle shows a rejection. So it shows that price is about to what? Is or is willing to move to our destination, which is our TP. So you place your what? You place your entry immediately after the close of this white candle, this expansion candle. Then you place your stop loss just at the low, or probably you can even place your stop loss below this. Then you target 1:2, which is very easy. Then when you look at it, can you see? Can you see how price played out? It hit your what? Your second TP. So most traders, what they will do is that after price has gone a little bit, they would have moved. You would have moved this your stop loss to this break even here. And if you had moved it to break even, this is what would have happened. This white candle that came down would have what? Take you out of the market. You understand? So which means that you are not what? Profitable on that day. Just a winning trade that you would have allowed to run. Now let's take another words, another chart, another trade. Now look at this trade on 1 hour, JPB JPY on 1 hour. Okay, so we want to trade because this trade is bearish, right? There is a fair value gap here. Now let's take a look at what we do. We map out our fair value gap. So we are expecting that price comes into this fair value gap. When price comes into this fair value gap, you understand, it will now reject price down. So that is when we now wait for our strategy to be formed. Can you see? This candle came into the fair value gap and it got rejected. This is a rejection candle. Can you see? The long wick, you understand, is small, is longer than what? The rejected part, or the rejected wick is smaller than what? The bullish body. So this is a rejection candle. So it shows that price is about to what? Expand down. Okay. Now, so immediately after the close of this rejected candle, just what? Enter. Then you place your what? Stop loss at the point, as the wick of what? Of this rejection candle. Then you target 1:2. So easy. Then look at it. Can you see? Price is actually going our way, but it has not hit our TP. So because price has gone fast, some traders, they will move their stop loss to break even, not knowing that price could still come around to what? To respect a new fair value gap that is formed there. And this fair value gap is even an opportunity for us to also take another entry. So leave your stop loss where it is, because price must definitely come to your hit your take profit. Okay, now let's take a look at what eventually happens. So can you see? So we are expecting that price will come into this new fair value gap so that we can what? We can seize another opportunity to enter the market. Okay, now let's take a look at, can you see? Price eventually went back into the fair value gap. It started into the fair value gap on this white, then it was not rejected. This is the one that eventually got rejected. This one went to sweep the high of the previous candle, then it got rejected. Now, if you have moved this stop loss to this break even here, look at what would have happened. Price would have gone up, take you out of the market. But for as a smart trader, for 1:2, just leave your stop loss. Okay, you don't need to be scared. You understand? Smart traders don't rush to break even. They allow probabilities to play out. Okay, so now that you have seen a rejection candle, then you place your stop loss above. This is your entry. Just immediately after the close of this rejection candle, you place your entry, then you target 1:2. It's as simple as that. Then what eventually happened? Can you see? Price eventually went your way. You understand? Hit your take profit on the first trade, hit your take profit on the second trade, and it even went lower. Can you see? It's as simple as that. Okay, it's very easy to what? To make lot of profits when you are not scared of moving your stop loss. Okay, do you move to break even early? All right, I want you to like these videos, comment, subscribe, so that YouTube can recommend it to other or every other traders out there. All right, thank you, Ageless.